All right, guys. Good morning. Good morning. Hope you guys are doing well. Today, market has been honestly pretty flat, but big ranged for like 3 days now. Been very whippy market, very hard to make money in. But if you attack the range, there might be some good strategies and opportunities as long as they don't start trending today. You can see a couple days ago during the 20-year bond auction, the market dumped down on the 21st, and we have basically been flat since then. We got a whole bunch of stuff next week, but this week has been slow with economic reports being a little bit light. We're going to do a poll saying which way will the market trend today? Bull, bear, sideways. It's going to be the three options. Vote on the poll. Let me know how you feel. There's the poll right there. What's up, Sam? Hi, Arif, Trey, Ant, IR, 9th, 77. Andrew, Lost, Ray, Ricky, what's up, Rick? What's up, man? R, what's up, guys? Doom guy, what's up, dude? All right, so we're here today. Good morning. What's up, Julie? Yeah, Nvidia earnings next week on the 28th. The market's basically been sideways, been running sideways. We got a couple things to talk about, though. Yeah, so stock futures relatively flat. S&P, NASDAQ showing modest gains. Dow remains steady. Investors are optimistic, cautiously optimistic, though, balancing concerns over debt, expectations of a Fed rate cut later this year, potentially. Tesla shares have gone up 1.5%. So Tesla actually ran a lot yesterday if we take a look at it. Tesla had this big green day. It's actually up pretty decently in pre-market. It's at 340s. Pulled back a little bit before the close, but look at Tesla run basically all day yesterday. So Tesla ran. The House passed the president's extensive tax and spending bill projected to add $3.8 trillion to the federal debt over the next decade. This development has raised concerns about increased borrowing costs and potential constraints on the government's ability to respond to future crises. Market participants are anticipating at least 2 interest rate cuts by the Federal Reserve this year, possibly starting in September, but this date is consistently getting pushed back. As I say that with Tesla, look at this drop right now that's tanking the market. Palantir is down as well. This might not be just Tesla's drop. This might be the whole market. Let me see. Something might have just happened somewhere. Could be Tesla, but it could be the whole market. We did have some news about chips. We'll cover. Hold on, let me check everything else. Look at this dip. Let's see if anything just happened. Jim Cramer says, here goes Palantir. Talk about unstoppable. Oh, no. Oh, no. Jim Cramer supporting Palantir. Yeah, I'm looking to see if there's any recent news. Okay, so the president threatened tariffs on Apple just now, is what this is. So the president is threatening tariffs on Apple. This is what just happened. Again, this is breaking news. President threatening tariffs on Apple here. Yeah, this is what's happening. Yeah, so again, President threatening tariffs on Apple. That's what's dragging things down. Look at Apple drop all the way down here. Interesting. Here, I will put this up so you can see kind of what's going down. Look at the drops. There we go. Just do it that way. All right. So again, U.S. president threatening tariffs on Apple. The market is negatively reacting to this. Look at it down to 21,053. Apple all the way down to under 194s here on this red action showing up. He said tariff of at least 25% if iPhone's not made in the U.S. That is what happened. So again, tariff of at least 25% if iPhones are not made in the U.S. That is what's dragging the market down here. So what just happened is the U.S. president is threatening tariffs on Apple. He said that we could have a tariff on iPhones. If iPhones are not made in the U.S., we could have a tariff of at least 25% on iPhones regarding Apple. And this has caused the market to fall down here. We're now at the very bottom of this range here in markets. Yeah, so we're now testing the bottom of the range. We're right at 21,000 here. Let's look at some levels. I think we should right now. We got one at 2150 right here. We could bounce right there. Got another one at 75 right here. Look at that retracement back up. But yeah, look at Apple. Apple's definitely driving this move. Everything else is kind of following it here. Yep. Yeah, we're adding to the news to kind of give the full. Get the full bottom, but yeah. Here's the news story. Markets definitely do not like this. So the news on Apple is that the U.S. president is threatening tariffs on them. He said there could have a tariff of at least 25% of phones not made in the U.S. That is what's dragging the market back down. And you can kind of see the initial reaction. Apple dropped all the way from 201.30s all the way down to 194.70s here. So yeah, this is all Apple related. Yeah. Markets following Apple down after the president announced tariffs potentially on them if they don't move to the U.S. All right, so yeah, markets are down. Again, just to clarify, after U.S. president announced tariffs potentially on Apple if they don't move iPhone production to the United States. We had some stuff going on in the European Union. They proposed a new trade deal to the U.S., which includes reducing tariffs on certain goods such as lobsters in exchange for relief from U.S. tariffs affecting European products. U.S. and Japan have been talking about tariffs. The Prime Minister has announced plans to meet with the President in June, aiming to reach a milestone agreement on tariffs that have impacted automakers and suppliers in Japan so far. Countries worldwide are racing to finalize a bunch of trade agreements as well ahead of impending tariff deadlines, seeking to mitigate potential economic tough times from these tariffs. We did have some economic news Or I mean, we did have some EAU news, or UAE news. I mean, G42, OpenAI, Oracle, Nvidia, SoftBank, and Cisco announced a partnership to build Stargate UAE. To delve into it further, in January, OpenAI CEO Sam Altman, SoftBank CEO, and Oracle's co-founder and chairman joined the president to announce a $500 billion 4-year initiative called Stargate to build out AI infrastructure. On Thursday, yesterday, UAE-based G42 said that UAE is a next-generation AI infrastructure cluster that Stargate is a next-gen infrastructure cluster that will run in a newly established 5-gigawatt UAE US AI campus in Abu Dhabi. Both OpenAI and G42 are both backed by Microsoft, and so we can take a look to see if this has moved Microsoft at all. But yeah, the big drops are in Apple. We're starting to rebound back up. We did bounce right here at 2050s. So we did bounce right here at 2050s. Let's see if we continue down. But yeah. We got some of the best financial content in the game right now, chat. Some of the best financial content in the game. Look at this. Hold on, let me see. Breaking. U.S. President threatens tariffs. We put the red Power Ranger out there. You know? Give me a follow at Beginner Trades. We appreciate it. Give me a follow. Thank you so much. And again, another day with very little economic reports, but this all changes this week, man. We got a lot more stuff coming out next week. Still kind of slow. We got Jerome Powell speaking on Sunday. We'll stream it. Next week on Monday, the market's actually closed for Memorial Day. Honestly, I think the market's actually open next week. And if you want to see what the market's going to do, you want to watch Apple. Apple hit the VWAP just now at 196. If it rejects and start testing these lows again, the NASDAQ will almost certainly come back down with it. So if you want to watch something right now, watch what Apple does. If Apple comes back down, retesting the 193 area lows of Apple, the NASDAQ's going to come down too. We also have a 21.1 level right here, which we talked about yesterday that we were trading a good bit, but we'll see what we get there. Like big dips. I had the weirdest dream, dude. The weirdest dream. It was like I was going to an NBA game. All right, so we're rebounding back up. Apple over the 196 level, though, over the volume-weighted average price. We'll see if it continues down. I mean, I wouldn't call it nonsense. I think it's yeah. I wouldn't call it necessarily nonsense. I don't know if it's good, but nonsense implies that it's nothing, and I don't know if that's true. I think it's something for sure. Apple's one of the largest weighted stocks in the world, you know, so I think it's something. All right, guys, taking a look at the 10-year Treasury yield. It's currently just at 4.5%, at 4.99%. It has come down a little bit over the last day, which is good. Since yesterday, it has decreased from almost 4.6 to 4.5%, where it's at now. Still high as investors are weighing on this tax bill that's going on in markets, so it's still high relative to all that stuff. What's up, Faye? Is it a buying opportunity? I think that ultimately depends on what Apple does here. Whether Apple continues to rebound back up all the way or what. That's going to dictate, of course, whether it's a buying op or not. Yeah. We'll see. All right, chat. We are still bouncing back in the NASDAQ here. Look at Palantir. Palantir up to 123.50 still. So, honestly, Palantir has been sideways for 10 and a half, a week and a half now. 10 and a half days. Week and a half. We'll see if that continues, but yeah. All right, still bouncing back a little bit. Do you short into this pop? I think we could probably try it, but I'm going to try it on a challenge account. So I'm going to try it, but it's going to be on a challenge account. Just because, like, I don't really trust it anywhere else, dude. We're going to do micro contracts. We're going to jump into 5 micro contracts and maybe add to it, maybe cut it. We're going to use a risk level in this instance of 35. And we'll try to give it some time to retrace back down. Okay, good. Small little trade to start the day, but that's good. Okay, we'll take some of this off. We took a little bit of this position off. We'll let the rest ride. Okay, good. We'll add a little bit more to this now. See if we can come down some more. Take a little bit off there again. See if we dip. Looks good. Nice. Okay, we'll take another piece. We'll leave this to kind of work a little bit here. We'll leave one contract to work and then maybe we'll add to it. Up about 125 so far on this. Nice. We'll add to this. Give it a second to come back down some more. There we go. Nice. We'll take that off immediately and then we'll cut this one here too. So we just made about $140 on that short. I think the short made more sense than going long. I think it's just kind of the simple trend of dipping down, rebounding, continuation. And so not too shabby. We'll take that. Green is good. Yeah, the news that's causing this drop is right here. Like, look, here's the news right here. The news that's causing all this stuff right here. I cleaned my office, bro. Honestly, my office desperately needed it. Like, check it out. My office desperately needed this. Here, let me get rid of the green screen kind of thing. There we go. So it's not like weird or choppy. But my office desperately needed it to be cleaned. Let me look. But now it's clean. Get organized. We got our library right there. But it's clean. Looks good now. It needed it. Whew. All right. Yeah, so we did just bounce right here. If you just let the whole trade, you'd make money. I mean, that might be true, but you're missing the point. Like, the point of it is not to look at it in hindsight and be like, oh, you could have made more money if you held. That's a rookie thing, brother. Like, it's more so, I get in small size and scale in and out to avoid risk. Yeah, like, sure, I can make more money holding the full size on green trades. I'm also going to lose more money by holding the full size on red trades. And so it's about risk management versus maximizing the reward and risk, you know. Yeah, the news that's taking the market are on the screen. And we got out exactly at the levels. And this is why we draw these levels too. Because, like, look, we came right back down to this level, the 75 level. And then that's exactly where we bounced. And so when we went in short about right here, and we covered it all the way down to here, you know. Why? Because then we're going to run into the support level, which is exactly what we did. And came right back up. So my hands are kind of off now. I don't know what to do. So I'm just going to cut it. Yeah, I heard nuclear stocks are running up today, though. That's good. Can you explain buying a short position? Well, most of the time you just hit sell. So you sell a short position and then buy to cover it. Yeah, it hasn't been a good week for me for sure this week, but I've used enough risk management to be okay. Like, I've lost more days than I've won, but the losses have been pretty small in my main funded account, so, like, we're okay. I don't know. I'm just looking at a 3-minute chart today. Doesn't matter. We can put a 1-minute chart up and look at the price action here, but I think it's cleaner on a 3-minute chart. Apple's consolidating after dropping some. It hit 195. So it just depends on what Apple does. Apple's influencing this move for sure. Apple's influencing this move for sure. It's just, we'll see what happens. All right, guys. So yeah, so we did have some news, like I said, some like microchip news. Nice. I'm looking at this. All right, so now we kind of got a double top right here. Okay, we did have the G Microsoft news. Anybody know the exact of the tweet about Apple? Yeah, I got you, bro. I'll get you. I'll get it. The president said this. He said, quote, "I have long ago informed Tim Cook of Apple that I expect their iPhones that will be sold in the U.S. will be manufactured and built in the U.S., not India or any place else. If that is not the case, a tariff of at least 25% must be paid by Apple to the U.S. Thank you for your attention to this matter." End quote. U.S. president. And look at the market dropping down even more. This does not look like it's Apple, though. This looks to be some other stock dragging the market down. Look at this big drop coming in. Another one here. All right, so the PBOC governor met with JP Morgan CEO Jamie Dimon. Two sides exchanged views on global economic financial situation, China-U.S. trade relations, and China's macroeconomic policies. Let's see if there's something going on right now, though, chat. Hold on. Let me look at stocks first. Typically, it looks to be maybe... Let me make sure it's not Tesla. Tesla is falling down quickly, though. Look at this. Look at Tesla fall. And look at the NASDAQ down under 2100s here. Something happened. Hold on. We're going to take a look at everything else. Wow, look at this. Look at Tesla reacted. Let's take a look at other stocks. Nvidia's down a lot. Okay, the EU has been very difficult to deal with, according to President Trump. He's recommending a 50% tariff on the European Union. Okay, so that is the breaking news that's tanking markets down. Okay, that's the breaking news that's tanking markets. Again, the NASDAQ is down big on this news here, chat. Big drop on the NQ. Huge. Man, we're getting red volatile action today, bro. I made my thumbnail red this morning. I had no idea we'd get all this red news coming out today, man. Crazy. No idea. All right, so now we're down even more here. Again, the news just happened. The president said, let's find the exact quotes. The EU has been very difficult to deal with, recommending a 50% tariff on the European Union. He said talks with the EU are going nowhere. EU tariff to start June 1st. That is the exact quotes. Talks with the EU are going nowhere. EU tariff to start June 1st. Wow. Interesting Friday today, guys. All right, so here's exactly what he said. Here's verbatim what he said. He said, quote, "The European Union, which was formed for the primary purpose of taking advantage of the U.S. on trade, has been very difficult to deal with. Their powerful trade barriers, VAT taxes, ridiculous corporate penalties, and non-monetary trade barriers, monetary manipulations, unfair and unjustified lawsuits against American companies, and more have led to a trade deficit with the U.S. of more than $250 million a year. A number which is totally unacceptable. Our discussions with them are going nowhere. Therefore, I am recommending a straight 50% tariff on the European Union starting June 1st. There is no tariff if the product is built or manufactured in the U.S. Thank you for your attention to this matter." End quote. U.S. President. And the NASDAQ, Nvidia, and other tech stocks and markets are dropping down pretty significantly on this news. We're getting a little rebound back up. I don't know if I'm confident enough shorting this move, though. Like, we shorted the first Apple move on the rebound bounce. And look at Nvidia. I don't know where I drew this level, but look at it. Yep. It's an interesting market right now, chat. This is a fun market. I'm going to call this Tariff Turmoil Friday. That's what I'm going to call it. Wow, look at, we've cracked lows again. Nvidia breaking down. Nasdaq has broken lows. We're now at 850s on the Nasdaq. Markets are starting to fall almost everywhere. Palantir down to 121. We can take a look at the SPY up here at the top right, 575. I'm sure gold is running up on this. Yeah, gold's ripping up, breaking highs of the day up to 33.40 for gold. I wonder what yields are doing. Let me check out yields right now. I'm sure yields are going up. No, I'm sorry, yields are going down. I guess people are more worried about economic weakness at this point in time. And they're buying up bonds right now, safe havens. Yields are going down right now. They're at 4.46% on this news. Gold is ripping up. NASDAQ, S&P, Dow, NVIDIA, Palantir. Markets are all dipping. And gold has broken all-time highs again. It's at 33.50 right now, 33.50 or so. What an interesting market. Yep. All right, traders add ECB rate cut bets. Favor 3 more cuts in 2025. Stock market futures are down over 1% today as the president says 50% tariffs are coming to the European Union June 1st. Again, he said the EU has been very difficult to deal with. No tariff if the product is built or manufactured in the U.S. Our discussions with them are going nowhere. 50% tariff starting June 1st for the European Union. We'll put this up on the top scroller now. Whoa, sorry here. Let me fix this myself. Says 50% tariff for EU Union, or for EU, I'm just going to say, is coming June 1st. This has led to a decline in yields. NASDAQ testing lows again. NVIDIA just broke lows again. Gold's ripping up over highs. Palantir breaking all the way down to 121s. Definitely an interesting morning this morning, guys. I mean, it's good for me. We got stuff to talk about, but man. So here's the stuff that's dropped the market, guys, just to clarify. A lot of stuff's happened over the last 45 minutes or so. This is what's happened. The president has been speaking again. First, let's take a look at Apple. Zooming into Apple here. Looking at Apple over here on this side. First, he said if Apple does not start producing iPhones in the United States, they're going to get hit with a 25% tariff. 25% tariff. Again, if Apple doesn't start producing iPhones in the U.S., 25% tariff. This has led to a massive decline in Apple stock short term. It's dropped from 202s all the way down to 194s. It initially caused this downward push in markets right here. This downward push in markets was caused by the Apple news. Okay, then about 20 minutes later, the president came out regarding the European Union, the EU. He said they have been very difficult to deal with. He said no tariff if the product is built or manufactured in the United States, very similar to Apple. But he said the discussions with them are going nowhere. And yeah, stuff is down. Stuff is down on this. And then that is what caused this big drop, not in Apple, but in most stocks. And the NASDAQ made this big move to the downside on that update. So yeah, market turmoil this morning, tariff turmoil this morning. We will see what we get here. But very interesting morning so far, chat. Be careful today. All right, guys, bear with me here. All right, here is the update to the news stories. And that is what's tanked markets here. Very interesting morning. We're starting to get a somewhat of a rebound back up, though. We are at 20.9K this morning, chat. Again, EU. Basically, the EU is not working with the U.S. in terms of manufacturing and production in the United States. He said if it's made in the U.S., they'll have no tariff. He's recommending a 50% tariff on European products starting June 1st, which is in about a week from now, chat. About a week from now. It is the 23rd, so it's in 8 days, a week and a day from now. It's about a week and 2 days. So this is in a week and 2 days, about 9 days. In 9 days, he's recommending a 50% tariff on the EU, the European Union. We also have the mix of Apple going here. Here's Apple. Again, it already dropped pretty significantly. It's down to 196 this here in markets, 196. So I guess the big question is, do we rebound back up? We did a poll this morning. We got about 600 votes on it. Most people thought we're bearish trend. I'm going to do another poll and end this poll and just ask, do you think the market rebounds from this bearish tariff news this morning? Or I'll just say today, yes, no. I don't know. Will be an option. Yes, no, I don't know. All right, there's the poll. Do you think the market rebounds from this bearish tariff news today? Let me know. Market originally came all the way down from Apple down to about 2150. Then once the EU tariff news came out, it had a big dump. At least we're getting volatility, though. As a day trader, volatility can be good. So, again, you can see Apple in the top right. It's at 196s. You can see, we'll put like NVIDIA up, or Palantir on the bottom here. Palantir all the way down under the previous closing price, red. NASDAQ's testing lows again. We're sitting at 844s right now in markets, chat. 844s. Sheesh, man. It's a big string of action this morning, guys. Y'all be careful. There's a report of 25 billion worth of shorts opened up by hedge funds Monday. Yeah. They want to slow bond yields going up. Yeah, bond yields, and some better news, bond yields have been decreasing. Like, look, so here's bond yields. So in some better news, they've been decreasing. They've been volatile, but like, look, they're down to 4.45%. They were at 4.6% yesterday. So in some better news, bond yields are coming down a little bit, which is kind of what you want from this. Anyway. Yeah. So next week, we got a whole string of stuff, but the NASDAQ just broke lows. Chat, the NASDAQ has broken lows this morning. We are all the way down to 840s right now, 20.84 right now in markets, chat, 20.84 in markets. Just cracked lows. It wasn't a big break. If we take a look at Apple rejected at this 196 level around the volume weighted average price, and it's still coming down some. Palantir still ripping down here. It's at 120.50s. We did our poll. Look at the NASDAQ getting a little bit more strength to the downside here. We're at 835s right now in the NQ, 835s. Still breaking down 825s, 820s. Still falling pretty weak here, looking a little weak. Do we bounce back, chat? 37% say yes, 51% say no, 12% honest folks say I don't know. So again, most people think we are not going to rebound today and that we're going to continue down. I'm not saying that's true. As you guys know, guys, like my big thing here is I don't claim to be an expert. I don't tell people fabricated stories. I just tell people what I consider the truth, at least, which is I'm not an investment professional. I might lose. Sometimes I trade off stream. You might not see it. Can't guarantee anything. Not an investment professional. Understand CFTC 4.41 and all that stuff, guys. Not an investment professional. We're just here to cover market news and economics. And next week, we got a crazy week. So if you want to know what's going on in markets, subscribe. Next week, we got NVIDIA earnings on Wednesday. The Fed minutes report on Wednesday. We got GDP data Thursday. We got PCE data Friday. So we got inflation data, GDP, jobless claims, pending home sales, Chicago PMI, Michigan consumer sentiment, the Fed minutes report, NVIDIA numbers, Case-Shiller house price index. We got CP consumer confidence, durable goods orders, and we got Jerome Powell speaking this Sunday, and we will be streaming that. So again, if you want somebody that's going to cover all this, subscribe, hit the notification bell. We appreciate it. Thanks so much. We got 1,300 here already at 7 a.m., so 8 a.m. market time. No bounce back. Will be massive green by 1 p.m. Looks like the U.S. purchases 200 billion more EU than the EU does from the U.S. EU needs us more, so the U.S. has leverage. Right, that's probably what this is about. Why this drop today? To simplify why we're dropping this morning, the president is speaking regarding tariffs this morning, which have been big impact, like catalysts for markets. Thank you, Kay. Appreciate the love. Thanks for becoming a member, brother. But yeah, the president has been speaking regarding tariffs. Originally, he spoke regarding Apple, said if they don't move production of the iPhone to the U.S., that they'll get hit with a 25% tariff. Then he pivoted to the EU talks. He said talks with the EU, the European Union, are going nowhere. He said if they don't start dealing with us, then 50% tariff on EU goods starting June 1st, unless they're produced in the United States. That is what's going on. So again, he said EU talks are going nowhere. If they're produced in the U.S., there'll be zero tariffs. But if they're not, 50% tariff on EU goods. Market did not like this. Here's the Apple catalyst dumped down, and then here's the EU news still falling down, still trending down. NASDAQ just broke lows again. We are under 790s here, chat. Under 790s. Interesting. He's speaking on social media. Again, I'll give you the full quotes again. Again, U.S. President said regarding the EU Union, he said, quote, "The EU was formed for the primary purpose of taking advantage of the United States on trade, has been very difficult to deal with. There are powerful trade barriers, VAT taxes, ridiculous corporate penalties, non-monetary trade barriers, monetary manipulations, unfair and unjustified lawsuits against American companies, and more have led to a trade deficit with the U.S. of more than 250 mil a year, a number which is totally unacceptable. Our discussions with them are going nowhere. Therefore, I am recommending a straight 50% tariff on the EU starting June 1st, 2025. There is no tariff if the product is built or manufactured in the U.S. Thank you for your attention to this matter." End quote. That is the quote that tanked this market pretty big here this morning on Friday. That is what's going on. Bitcoin just now has fallen under 110s here, chat. Under 110s for Bitcoin. It's at 109s now. And it has been a volatile morning, chat. A volatile morning. Bond yields. The good news is bond yields are down. Bond yields are down. We kind of needed bond yields to fall based off of this past 4 days after Moody's downgraded the U.S. credit rating agency on Friday of last week, which is downgrading bonds and others. This caused a sell-off in bonds, which spiked yields up to a very high level at 4.6%. 4.6%. Bond yields have now decreased on this news down to 4.5% roughly, just under 4.5% at 4.45, 4.46% if you round up. So that is where bond yields are now, and this is a very good thing. We kind of want this to happen. We kind of want the yields to fall because that means lower interest rate sentiment, especially with mortgages, and I think that's what a lot of people want right now. So bond yields needed to come down a little bit. They were way too high, and so just to take the silver lining here, bond yields have decreased a little bit on this news, which is good. So I would say what Amazon is saying is more influence than 200 people. Michigan polls for consumer sentiment. I don't know, man. I think, is the music too loud, chat? Let me know if the music's too loud. I don't know. But this is what I would say, is that what influences the market varies from year to year, month to month, quarter to quarter, week to week, right? And so I would say at the same time last year, inflation data move markets because we were coming out of an inflationary market where inflation had spiked to 5, 6, 7, 8%, depending on which metric you look at. That was the big catalyst. Now, CPI inflation doesn't really get that. I mean, we got like 3,000 or 4,000 people tuning in for CPI inflation, but in the big moments, we would get 5 or 6, and so it really depends on what's going on in markets. At this point now, tariffs are influencing things as well as consumer sentiment. I think a lot of people agree right now that we are heading towards a stagflation environment in which, like, we don't just fear economic weakness right now. We had GDP show up at a negative number for initial estimate GDP data, and we get the next one next Thursday. And again, this is something that we will be streaming on Thursday at 8:30 Eastern Standard Time. So again, subscribe if you haven't yet. We will cover it literally as soon as it comes out. We'll have thousands of people here watching it. I'm really curious to see what it shows up with next week, because the last time it showed up at a negative number. And a lot of people are arguing that we're heading towards a recession, but I think inflation fears are still there because of the tariffs. I think what the tariffs are doing is creating a more stagflation environment, a more stagflation fearing environment, because people are worried about economic weakness from the tariffs, but not just that, they're worried about price increases from the tariffs. And this is in an environment where we've seen, 4 years now of inflation markets, where inflation has gone up dramatically over the last 5 years. Prices today relative to 2019 are obscenely high, and a lot of people are unhappy about that. And so I think right now the Fed, and this has kind of bothered the president as well. And again, I'm not saying I agree or disagree with either one of these guys. What I'm saying is right now the Fed is hesitant to cut rates. Like if we take a look at the rate cut odds this morning, pivoting to kind of rate cuts and rate cut odds and stuff like that. If we pivot to rate cuts and rate cut odds, you can kind of see as of now on the CME watch tool, it's only looking like a 5% chance that we cut rates in June. This has actually increased a little bit, but we got about a 5% chance of a rate cut in June, about 95% chance that we pause in June. If we take a look at what most analysts and expectations think, they're looking at September for a first rate cut of 25 basis points. Currently, the odds of that are at about 55%. But these odds are subject to change, okay? So just to give you guys kind of like a guidebook on what will influence the odds of a rate cut, good or bad. NASDAQ just broke lows again. NASDAQ just cracked all the way down to 760s. Chat, 760s. Bitcoin still testing lows. NASDAQ still falling on this EU news. Still falling down drastically on this EU news. But again, what's going to influence these odds is inflation data, GDP data. If we get high inflation fearing data, if we get inflationary data, if we get inflation spiking up higher than last time, higher than expected, at an unreasonable number that might scare markets, these odds are going to get pushed back. Like the likelihood that we'll get a rate cut is going to get pushed back further. If we get strong economics, like if we get strong data, the odds of a rate cut will get pushed back further, or could get pushed back further, I should say. On the other end, if you want rate cuts, what you need low inflation data. You need low inflation data and weak economics. And so one of the reasons bond yields have been decreasing on this data is because this signals potentially economic weakness. And so bond yields have been falling down, and interest rates and yields follow each other. And so if yields are decreasing, that means that we have a lower interest rate sentiment. It means that the likelihood of cuts gets higher. Lower interest rate sentiment, interest rates might decrease. And so, again, if you want rate cuts, you need weak economics and good inflation data, meaning like price stability, inflation under control. Inflation needs to be low, and the economy needs to be weak if you want rate cuts, right? That's where the Fed's going to justify rate cuts. And so if you want to see these odds change, that's what you want to look for. Is if you want rate cuts, you need a weak economy data. You need GDP to show up more negative. You need inflation to be under control with weak economics and labor markets. If you want less rate cuts, if you don't want rate cuts, or you want rate cuts to get pushed back, you need high inflation and strong labor market, which kind of go hand in hand with each other. All right, so NASDAQ is still testing these lows. NASDAQ is still testing these lows. They're dipping down there at 765s right now. 765s. Palantir still breaking down. Apple's still looking pretty weak. And markets are fearful this morning, chat. Yeah, take a look at gold here. Here's gold. Gold's breaking all-time highs just now. Or not all-time highs, I'm sorry. Gold's breaking highs of the day at 33.55 currently. Bitcoin most of the time follows the macro market. So somebody saying, why is Bitcoin dropping? Bitcoin typically moves with a macro sense. It can move differently though. It can kind of detach from macro and go its own way sometimes as well. But in general, it moves with macro markets, especially with big catalysts. Wait, this means I should buy a computer before June because new hardware will cost 50% more. If it's coming from the EU or other, maybe. I don't know. I guess I'm trying to think. Where does, I mean, I don't know. If you buy like a memory stick or something like that, most of the time that's coming from Taiwan, right? NVIDIA. Depends on which one you buy. Yeah, Powell's worried. Okay, Powell hasn't wanted to cut rates. And he's worried about inflation that we get from tariffs is basically what's going on. So like Powell's fearful of inflation that we get from tariffs. We did have building permits and housing. We did have U.S. building permits. They should have been 1.422 million versus 1.41 million expected. Basically flat. Change was minus 4% versus minus 4.7%. So a little bit less of a decrease, but still a decrease for building permits. Chad, just to clarify. Yeah, and again, this is what's going on in markets. Gold's breaking highs. NASDAQ's breaking down. Palantir's dumping down to 120s. So we're getting weakness everywhere. So this 90-day tariff pause is over. The 90-day tariff pause was for U.S. and China. Slim. The news that we have today is regarding the European Union. Again, European Union, the president says, has been very difficult to deal with. He said there's no tariff if products are built in the U.S., but he said discussions with them are going nowhere, and that tanked market. So this is with the European Union specifically. The 90-day pause was regarding China. Actually, I think you're actually correct, where prior to the China 90-day pause, he announced a 90-day pause everywhere else besides China. And so he might be removing that 90-day pause to the EU starting since it's June 1st. So we'll see. We'll have to wait and see what happens. Yeah. No, you're right, Matthias. That's correct. If I remember correctly, the original one was 90-day pause everywhere besides China. Then he announced the 90-day pause to China. And so if he's recommending 50% June 1st, that's definitely earlier than 90 days. I guess he's canceling that out for EU. Getting frustrated with them saying, hey, these tariffs are going to kick in soon if you don't make a deal, is probably what the strategy is. Why are bonds pulling back? Because people think the economy is going to be weaker and we're going to need earlier rate cuts. So I hope that makes sense. So again, there's some important correlations to understand for everybody here. Okay. Bond prices and yields, and the yields of those bonds, inverse each other. So if prices go down, yields go up. That's something we saw after Moody's downgraded the U.S. credit rating agency, i.e. U.S. bonds. What we saw is yields spike because the bonds got sold off because they got downgraded, right? The other correlation that's important to understand is that interest rates, especially mortgage interest rates, and yields follow each other. And so if yields spike, it's a higher interest rate sentiment. I think it means that we're going to get less cuts, hawkish actions for longer, at least in the sentiment. If yields are going down, like, okay, if people are fearful of these tariffs regarding economic weakness, what are they going to want? They're going to want earlier rate cuts. That makes yields fall down. That is why yields are decreasing, because of potential for earlier rate cuts, basically. Yields are decreasing because bonds are getting bought up because of fears of economics, right? And bonds are safe haven, risk-off assets, right? The stock market is kind of risk-on, better yields, less guaranteed. Bonds are smaller yields, guaranteed by the U.S. government. And so when people are fearful of the stock market, like the stock market decreases, they flock to bonds, which means bonds are getting bought up, which means yields, again, inverse bonds, which means yields go down. Just to give you guys the understanding of it. Like, that's what's happening here. It's nuanced, but once you start to understand the correlations, it becomes easier to track. NASDAQ's testing lows here. We're at 765s. All right, so the EU commissioner has declined to comment on U.S. trade tariffs until a call between EU trade chief and U.S. trade rep. So again, this is happening regarding yields as well. The EU commissioners refuse to comment on things until they talk with a U.S. representative. I should have been shorting this move today, but that's all right. Here, so this news just happened. EU commissioner has declined to comment on U.S. trade tariffs until a call between EU trade and U.S. rep. And again, guys, you can give me a follow at Beginner Trades, for breaking news. Why is the market running red? Well, the market's running red for a number of different reasons. One, the U.S. president said that Apple, if they don't move iPhone production to the U.S., are going to get hit with 25% tariffs on Apple products. That tanked Apple. Consequently, sympathy moved down the rest of the market. Apple's a heavily weighted stock. The second thing that came out this morning is that the president talked about the EU and trade talks with them. He said they're going nowhere. He said if they do not, he said that he's recommending a 50% tariff on EU products starting June 1st if they are not produced or manufactured in the United States. He said if they're produced and manufactured in the U.S., there'll be no tariffs. But if they're not, he's recommending a 50% tariff starting in 9 days on June 1st. That is what consequently tanked the whole market all the way down under 2150. We're now down to 2070s, 2700s. So yeah, just to give you guys the quotes regarding the president on Apple here. Just to give you like the full quotes regarding the president on Apple. This is what he said. He said, I have long ago informed Tim Cook of Apple that I expect their iPhones will be sold in the United States, will be manufactured and built in the United States, not India or any place else. If that is not the case, a tariff of at least 25% must be paid by Apple to the U.S. Thank you for your attention to this matter. End quote. Okay, that is what he said this morning regarding Apple, tariffs, stuff like that. That, again, I talked about this earlier, but that is what caused this initial drop right here, this initial drop. The EU news, where he said talks with them are going nowhere, he's recommending a 50% tariff on European stuff unless they're manufactured in the U.S., was this. So these are two things that happened within 45 minutes of each other that tanked markets pretty big percentage this morning. We're going to maybe switch to our actual funded account here and see what we get. But we're starting to slow down a little bit. All right, so we did, we're in one of our challenge accounts. We're up, we're about $600 or $200 on this one on the day. We bought the dip here in one of our challenge accounts, but this is our funded account. We'll see if we can get in some trades here. Again, if you haven't already, check out Top Step. Top Step, most day traders lose money. It doesn't matter what course you take, who you follow. Most day traders lose, especially for the first year or two. This is objectively true. Most traders will honestly answer this truthfully. Most day traders lose. I did when I started, and this is not just me. Almost all new day traders lose in the first few years. And so you got a couple options. You can either fund your own account. In order to trade freely, you're going to need 5, 10, 20, 30 grand, depending on what you try to trade. And again, you're probably going to lose a chunk of that. Or you can limit your risk and try a funded account program. Top Step gives you a 50K demo. They test your skill for the base one. Learning how to trade in this way makes sense. You have to risk something. So you're learning how to trade with some pressure, but it's not the full extent of risking 5, 10, 20, 30 grand like most new day traders end up losing. And so your risk is $50. You got to make 3K in profit on a demo without losing 2K first, following their rules and conditions. If you can do that successfully, they fund you 50K with a 90% split, and you get to keep your first 10K prior to that split kicking in. Very similar to funding your own account. If you fail, the base one's $50, the middle one's $100, the top one's $150. So your risk is much more limited than it would be if you funded your own account. And they're the most legit in the world. They paid out hundreds of millions. They fund thousands. It's just a beautiful way to trade and learn in a structured environment with less risk than most day traders end up taking. And again, if you use Top Step X through my link, you get 0 commission as well and a tiny amount of fees per trade. So it just makes sense. I think that just makes sense versus, I know I lost 4 or 5 grand in the first 3 weeks of my trading. It wasn't good. Carol begged me not to do it. I ended up losing tons of money. But again, I'm biased because I get paid by them. I can't guarantee anything. Not an investment professional. You know, not liable if you lose money. Understand all this stuff on screen. Here's the link if you want to check it out. Great way to help support the channel. I'll pin it to the top of the page. Understand all this stuff on screen, guys. And yeah, not an investment professional, biased in their favor for sure. But again, if you want to check it out, I'll put it up. I'll pin it to the top of the trade, or to the top of the chat as well. But what a volatile market day today, guys. Do you guys think the market continues to break down? Looking at our poll numbers, 49% say no. The market does not rebound today. So almost half of all voters said no, the market does not rebound today. And we're still kind of moving down here. A lot of it depends on what happens regarding tariff news for the rest of the day. Bitcoin is down, hit 107.5 in Bitcoin futures. Apple, after the bad news, just recently cracked lows again, got down to 193 for Apple. Gold has been spiking up. Here's Apple again. Apple at 194s right now, but it hit 193s again and broke lows of the day. So looking very weak. We got to watch like Palantir and Nvidia here as well. Watching some blue chips. Nvidia just cracked lows of the day. Yeah, so Nvidia, another one that's obviously reeling from this tariff news, down to 129s right now. 129s for Nvidia, looking weak. The Nasdaq's getting back down there to test lows. Why does it not rebound today? It's because of a 3-day weekend. Yeah, we do have a 3-day weekend. We have the stock market's going to be closed Monday. BTC will be the canary in the coal mine. Yeah, Bitcoin breaking down. Apple's looking pretty weak here. Falling knives everywhere. Yeah. I had a feeling we were going to see him come back with more tariffs. Well, I mean, it depends. Like, yeah, it depends. The big one's China, but the EU's pretty good too. I mean, pretty important as well, of course. Such a big range of people. So, again, nuclear stocks have been running. Again, the EU commissioner also declined to comment on U.S. trade tariffs until the call between him, the EU trade chief, and U.S. representative happens. Now, Nvidia is what's dragging the market down right now that I can see, though. Look at Nvidia here, chat. Nvidia cracked lows again. Got down to 128.60s here. 128.60s, you can see it right here. Nvidia tanking the market. Nvidia is above me right here, but you can see it right here. Tanking markets down, looking weak. Yeah, I mean, markets are still up massively over the last couple weeks. Like, you know, like something that happens a lot with short traders is that, like, the market will do this. Like, the market will do this. And it's just crickets, and then the market does this, and they're like, see, I told you. And it's like, what are you talking about, bro? The market's up huge over the last few weeks. It's nuanced this time, though. It's nuanced this time. But yeah, I mean, we are down to here after this move up. So, we'll see what happens. Is this the end of the next bull run? I don't know. Maybe. Depends on what catalysts come out, to be honest. Again, guys, so next week is a very busy week. Very busy week. We also have Jerome Powell speaking on Sunday that we're going to cover. Jerome Powell, Sunday. We're going to stream it fully live right here. You'll be able to watch it completely live right here on YouTube on the Beginner Trading channel. Next week, chat, we have durable goods, CB consumer confidence, Case-Shiller house price index Tuesday, Fed minutes report, Nvidia earnings Wednesday. Thursday, we got jobless claims unemployment and GDP first revision data, updating the GDP that was negative 0.3% last reading for the initial estimate. Friday, we got PCE inflation data and more. It's a very, very, very busy next week. We got Michigan consumer sentiment and other stuff too, so just be careful, guys. Just be careful. NASDAQ is testing lows, just cracked lows again. Nvidia breaking down to 128s right now. Nasdaq just broke down under the lows. It's now at 744. So we've continued in the downtrend after this news today. Nvidia is at 128s, 127.90s now. Nvidia is still breaking lows. Palantir is breaking down here as well. Palantir is now down to 119s, under 120. Still falling. Yeah. How soon do you think Europe will respond? Well, they declined to respond this morning already. They said they want to speak with their trade rep with the U.S. Basically is what they said. Is this music bad? You want me to change it? This is an old playlist. I just try to find calm music. It's kind of like a Mortal Kombat beat. Any reports at 8:30? No, not really. No 8:30 reports. Let me check to be sure, but I'm pretty sure we don't have anything. Yeah, I'm pretty sure we don't have much. Building permits are already out. So it says building permits at 8:30, but they're already released. We got Canadian retail sales. At 10 a.m. we got new home sales, but building permits are already out. So, yeah. Yeah. Straight 50% tariff on European products starting June 1st. All right, so Nvidia found a bottom around 128, at least for the last few minutes. Palantir as well. Let's see if we start to rebound back up. Yeah, earnings are pretty small today. Next week, Nvidia earnings are obviously the focus. So next week, we got Nvidia earnings. Hey, thank you, Room. Appreciate it, brother. Thank you, sir. I'm not saying we don't keep going down, but the psychology doesn't lie. I lost my wedding ring. Carol's pretty chill about it, but I need to go get another one. Not my actual wedding ring, my cheap rubber wedding ring that I buy. It came off at jiu-jitsu somewhere. And I don't know where. Oh, well. All right, so we did have some Volvo news this morning. The CEO says customers will need to pay a large part of price increases related to tariffs. So he basically said the tariffs are going to be reflected into the customers. We had the Polish trade minister saying the EU and US have time for negotiation until early July. As far as he knows, talks are going on. They are focusing on talks behind closed doors, not in public, and the EU commissioner. Yeah, I mean, the Polish trade minister basically saying contradictory stuff this morning, though. Again, the Polish trade minister said the EU and US have time for negotiation until early July. No, they don't, bro. No, they don't, sir. June 1st, we got 9 days. And again, he said, quote, as far as he knows, talks are going on. They're focusing on talks. It's not quoted, but he says, as far as he knows, talks are going on. They're focusing on talks behind closed doors, not in public. And the EU commissioner, Šefčovič, is doing very well. Right. Doesn't sound... honestly, this doesn't look like behind closed doors to me. You know? Yeah. To me, that seems kind of like damage control. Like, hey, things are fine. Don't worry about it. They originally had it until July. Now they have until June 1st. Gym bag? Yeah, I mean, I don't know where it's at, to be honest. Honestly, this is what happened. I went to jiu-jitsu Wednesday. Came back. Was living life. And looked at my finger and realized it was gone. And said, oh no. Carol's pretty chill. She understands jiu-jitsu is like hyper physical, and so it could have popped off somewhere. That somebody probably grabbed my hand and, you know, tried to stop getting guillotined or something, and then it popped off. But yeah, again, European Union June 1st. Look at this rebound back up, though. So we did get a pop back up. We are now at 20.815s, 20.82s. Palantir's rebounding. Nvidia's back up to 128.50. So we are seeing some movement here. I'm being very selective with my trades this morning. I am a little interested in shorting if we can get up to like 935s. We can get up to this level, I'll be interested in shorting it, but I want to wait for that. So I do want to wait for that. We'll see. This rebound is not big enough. It was a rubber ring, though. It wasn't a metal ring. I learned a long time ago. If I'm gonna train jiu-jitsu, it's probably better not to wear a big gold or silver ring, because that thing's getting lost if you do, or you're hurting your finger. The bearish tariff news is very simple. The president has been tweeting, kind of. Canadian retail sales showed up at 0.8% versus 0.7%, previous minus 0.4%. So a little bit stronger for Canadian retail sales than expected. It came in at minus 0.7 versus a positive 0.5% for core retail sales, though. And so, yeah, the big bearish news today, president said if Apple doesn't move production to the U.S., they're going to get hit with a 25% tariff on iPhones. If the EU doesn't get a deal done by June 1st, they're going to get hit with 50% tariff if the product is made outside of the United States. That is the news that is consequently dumped markets down pretty big this morning. Markets are starting to rebound back up, though. We got Nvidia up to 129s again. And look at my cup today, guys. I got a jiu-jitsu mug. Carol got me this cup. Look at this. No. It's a jiu-jitsu mug. It says it might look like I'm listening, but in my head I'm doing jiu-jitsu. Honestly, I haven't been trading that much lately, to be honest. It's been busy. I feel like half the stream gets mad if I talk about it too much. Bond yields, though, guys, have come back down. So bond yields still decreasing here. They're at 4.47%. Still down. So bond yields, one of the good optimistic silver linings regarding these dumps in markets is bond yields, right? So after the Moody's downgrade, bond yields spiked. Why? Because bonds got sold off and bonds and yields inverse each other. So if bonds are getting sold off, yields spike. And that happened. Yields got up to 4.6%. 4.6%. The good news around this is that people are worried about risk on markets, and so they're moving to risk off markets, which are bonds, which means they're buying some bonds, and yields are going to come down, which means a lower interest rate sentiment. And that's what's happened. Yields are currently back down to 4.45, 4.46%. Still pretty high on average for bond yields, to be honest, but they're down a little bit, so that's a silver lining. I'm all about free speech, but man, this is brutal. Yeah. Hey, it made my morning exciting here. We got 1,500 people watching here, so it did help me get some interest right now. People know they can, like, if you want to know what's going on in markets, you can watch my live stream. And Nvidia has come all the way back up. Part of the reason we're getting a bounce back is Nvidia specifically here. Palantir rebounding back up as well. It's back up over 120s, which is good. It's kind of what you want to see here. We'll see if it continues. Gilead's a set 03 study met primary endpoints with significant improvements in PFS. Safety pro consistent with prior studies and no OS detriment was observed. Again, Canadian retail sales showed up. Core retail sales came in more negative than last time. Regular retail sales month over month came in slightly better than expected. Yeah, if you got an overnight trade, you're probably pretty unhappy this morning. It's the only live stream you get instant updates. Hey, thank you, Mark. Appreciate it, brother. All right. We're consolidating here. We're waiting. We still got a week left in markets, chat. A week left. I want to short it if it gets up here, but I think I gotta wait for that. I mean, I could short it here as well, but I think I'm just gonna wait for this one. I'll check a little bitty trade on my Combine account and let you guys watch it if you guys want. But we're gonna take a small trade and then add to it. Maybe if we get green. If we don't get green, it's very small. See if we come back down a little bit. We got a 3-minute chart up that we've been using most of the morning. A little bit of green here. Here we go. That's better. You got to be careful with this market, though, man. With a lot of catalysts and spikes in markets. That's better. We'll try to add to it if we fall down some more. There we go. See, that's a quick retracement. I'm going to cut this and then get out. We're basically flat on this position here. Okay, so we switched and we bought this up. Once we see that retracement back up, we're going to go and cut that right there. So actually, we just ended up making about 40 or 50 bucks. Very small. But we ended up pivoting to the other direction once we cut out of that one break even once we got back up, and we pivoted to the long side, and that worked. So we're up about 270 on the day or so, give or take. Top 3 most informative ever. UNH. Where's UNH today? I haven't looked at it. I didn't look at it yesterday. So UNH rebounded some after these massive drops, and now it's back down a little bit. It had a green day yesterday, though. Still trying to hold over 300s, which is kind of a big dip. It had some bad news come out for UNH. What the heck was that? All right, chat. Top 3 jiu-jitsu trader. I don't know, bro. I don't know what it is. I've been getting beat up in jiu-jitsu, bro. Like, I think it's the classes I've been going to. There's, like, no other white belts there. It's only, like, purple and brown and blue. And so, like, those classes are tough. For me, as a no-stripe blue belt, top 3 worst ever. What's romantic? I think Nvidia, the bigger joke of tech with a penny divide, is the biggest joke of a lifetime. So you don't like Nvidia stock? You think Nvidia is up too much on hype? What's the PE ratio currently for Nvidia? I'm showing a PE ratio as of yesterday. It's 25 for Nvidia. Honestly, that's pretty good. That's the forward PE, though. What's the TTM? Hold on. Okay, it's 45 actually, which is less good. The forward PE is very good at 25. I don't know about very good. Very good's like 15. But the PE ratio is better than it was. I'll say that for Nvidia. It's still not necessarily good. It's like 50 or 45, but it's not as worse as it could be. It's not like Palantir, and I like Palantir as a company, but Palantir's PE ratio is scary. What's the future forward PE? $203 forward PE. I like Palantir. I think Palantir will be fine as a company. I think eventually its margins will catch up. You just got to give it time. Nvidia growth has slowed down. Yeah, so Nvidia here, chat. People are saying Nvidia's growth has slowed. I don't know. Like, look, it had slowed, but like, look. This end is the green, like this is Nvidia growth right here. At least in terms of its EPS growth. Now it's slowing down a little bit. Let's take a look at the revenue for Nvidia. See what that's looking like. I mean, it's slowed down a little bit, but that's pretty standard. So here's Nvidia's revenue. This is the revenue. So it's decreased some for sure, but I mean, that's pretty normal. Most of the time, it's not going to continue to like go crazy. All right, so we're kind of in this interesting spot where we've broken down a lot this morning, rebounded back up, and now we're starting to come back down a little bit. I think we got to watch Nvidia right here, Palantir doing the same thing. So I think we got a lot of stuff to watch. Gold has been loving this, of course. Bitcoin has been coming back down with us some. What's up? What's up, Tiny? You got out of your oil trade? Is oil, yeah, oil down to 60s again. Bounced exactly at 60. Honestly, the more I've been watching oil, the more you realize like how consistent oil can be. I mean, excluding crazy momentum like today, which influenced everything. Oil has some of the easier trends to spot. Like typically, oil starts to trend up, you got a very consistent trends. Oil starts to trend down, you got some good stuff too. So oil has some interesting trends to watch. Hey, nice, Tiny. Good job. And again, you guys, remember, we are going to day trade at the opening bell this morning. What do you think about the mirror? What do you think about trying to mirror MicroStrategy's strategy as an individual, meaning you short MicroStrategy and buy Bitcoin, essentially follow MicroStrategy's own business plan? Ooh, I don't know. I think that's fine. Obviously, you're gonna have to scale down a lot, and I think it really depends on. I mean, wait. So you're saying you should short MicroStrategy and buy Bitcoin? But if MicroStrategy goes up because Bitcoin goes up, aren't you going to lose? Short MicroStrategy, buy bonds, 20-year bonds. Yeah, but they can sell shares to buy Bitcoin, which is dilution, but they're a public company, so they might get bought up anyway. So I think it's a little bit more nuanced than that. Yeah, to me it sounds a little out there. I'm not doing it. I'm not doing that. Yeah, there's no way I'm doing that. Any chance you could look at Meta? Yeah, I can take a look. Meta's at 623s today. So 623s. Yeah, 50% tariff is wild. Again, the silver lining here is that bond yields did go down. Again, here's bond yields. They did decrease. So that's good. You know, we'll see if that continues. Yeah, the VIX is obviously going to be increasing now. Up to 25s or so. So the VIX is doing very well on all this stuff. You know what's what's interesting? All right. Is that last night when I was selecting a thumbnail for this stream, I ended up choosing the Market Chaos red thumbnail for some reason. Even though we've had choppiness all week. Like the market's basically been sideways since Moody's. Like if we take a look at like broader markets here, The nasdaq has been sideways since we had the bond auction on the 21st. So for the last few days, we've been basically purely sideways. But for whatever reason, when I scheduled this stream yesterday, I did the market chaos red thumbnail, and that's what we got. That's what we got. I'm not saying the thumbnail caused this drop, but maybe, possible. Yeah, 25% tax on Apple if they don't produce iPhones in the U.S., 50% tax on the European Union if they don't produce things or manufacture in the U.S. starting June 1st. I understand it's a hedge strategy, but personally, I'd rather just go long on Bitcoin. I'm not telling you what to do, not an investment professional. But I think Bitcoin's going to go up no matter what. Okay, so somebody's asking, can the president impose tariffs specifically on Apple? The short answer is not directly, at least not legally or traditionally in a sense. Here's the breakdown of the legal trade framework around this issue. So can he legally impose tariffs on a specific company like Apple? No, not under normal trade law or constitutional standards. This is why. What the president can do: impose tariffs on countries, categories of foods, or industries like 25% on all Chinese electronics. Do this under statutes like Section 232 of the Trade Expansion Act of National Security, Section 301 of the Trade Act, Unfair Trade Practices Section, International Emergency Economic Powers Act. What he cannot do is target an individual U.S. company for a punitive tariff simply because he disagrees with his actions, unless there's a national security justification and it's tied to specific international commerce violations. This could face legal challenges on grounds of due process, unlawful executive overreach, and violations of WTO and USMCA trade obligations. So the short answer is no, he cannot, but he could find a way to. And I think that's probably what he's talking about, is that he could find a way to. So we'll see what happens. So it'd probably be broad tariffs, not targeting a specific company. He would find a way to make it target Apple, though, is what it sounds like. All right, so we got the Fed's Goolsby speaking. He said rate cuts are still possible over a 10 to 16-month horizon, according to Fed Goolsby. So the Fed's Goolsby is speaking right now. He said businesses are telling the Fed they want consistency in policy before making big decisions. So again, Fed's Goolsby is speaking about stuff. He said rate cuts are still possible over a 10 to 16-month horizon. And he also said businesses are telling the Fed they want consistency in policy before making big decisions. Yeah, all good, Snail. He says I do what I want, I guess. Again, I'm not saying I agree or disagree with him. Looking at our poll this morning here, chat, 40% of people say yes, the market does rebound from this bearish news. 48% say no, though. 12% say I don't know. Which companies will be affected by EU tariffs? Companies that produce things in Europe. EU is a pain in the butt. They're constantly suing U.S. corporations. Yeah, maybe. Bernstein analysts reaffirm market perform rating. Bro, I know. I don't like PFE as a company, though. It's too volatile. I don't like biotech. Or pharmaceutical, I should say. Unless he comes out and says no tariffs on China, we're definitely not rebounding. Yeah, again, guys, I talked about this earlier. We'll talk about this today. What moves markets changes week to week, month to month, year to year. This is just objectively true. I've been streaming big economic financial events for years now. What moves markets changes year to year, month to month, week to week. Sometimes it's inflation data. Sometimes it's GDP. Sometimes it's NVIDIA earnings. Most of the time it's NVIDIA earnings. Sometimes it's tariff news. And the last like 3 months, 2 months have been tariffs impacting markets drastically. So that's kind of what's going on. All right, guys. So, yeah. Basically, we've had this big news. Markets are down, but now they're rebounding back up a little bit. I'll get interested in shorting if we can get back up to here. This 29.50 level really is what I'm interested in. So, probably about right here, actually. I'll consider shorting if we get back up there. As of now, we're kind of in the sideways, like, choppy phase. We made some money this morning, but it's definitely been in this kind of, like, sideways, like, choppy, weird market. And we still got 40 minutes left until the market opens, chat. 40 minutes left. So, again, Fed members' goals will be, again, says interest rates are still within historical ranges, but there was a crisis over U.S. fiscal stability. He said they would be moving higher. He said still sees rate cuts over, again, the next 10 to 16-month horizon as possible. He said, quote, I still feel that underneath the volatility, the economy remains strong. If tariffs and uncertainty were not a threat to inflation, rates could eventually fall. Again, this is something we said earlier, like Jerome Powell, the Federal Reserve, their interpretation of this economic stuff with these tariffs is that it might make inflation worse. And so if we didn't get this tariff news, I think we'd probably already cut because they're fearing inflation from these tariffs, right? And again, the Federal Reserve, the way they work is their job is to maintain balance in the economy. If you don't understand this stuff, listen to what I'm about to say. The Federal Reserve's job is to maintain balance. Okay, it's not just they want a low interest rate environment. You know, if that was the case, we would have low rates. But the problem is that maintaining a low interest rate environment in the wrong conditions is bad because it can make inflation spike. You know, so the Fed's job is to maintain balance between inflation and the labor market. If the labor market is weak, typically, if it gets weak enough, the Federal Reserve will step in and stimulate the economy in one way or another. One of the ways is by cutting rates. If the economy is weak enough, if the labor market's weak enough. Another way is by doing a more desperate thing called quantitative easing. It's a form of money printing in which the Fed creates online bank reserves and then uses those online bank reserves to buy up a bunch of bonds and other financial assets like MBSs. And this injects liquidity into markets and ultimately brings interest rates down a little bit faster. It's a more desperate decision. The reason it's more desperate is because when you do this, the consequence can be inflation spike. And so an example of this is in 2020, the Fed cut rates. They also did QE to save us from the 2020 disaster. And the consequence was 2 years later because of a lot of different reasons, not just QE, not just low interest rates, but because of supply chain problems, stimulus checks, and others. Inflation spiked up to almost 10% for CPI, almost 7 or 8% for PCE inflation. And so once inflation remains at risk, and that's really the reason a lot of people are unhappy modern age, is because of that inflation that we got from all the economic stimulus, supply chain problems, and more from 2020. That's why people are unhappy modern age and why people think that the economy is such in a weak spot. It's that the economy has been like hella weak. It's that prices are 2, 3, 4x what they were in 2019. And that's why people are unhappy modern age is inflation. And so when the Federal Reserve looks at it, they're worried about inflation right now, or we would have already cut rates because they don't want prices to spike up more. Then people are really going to be unhappy because we've already had such big price increases since 2020. If all that makes sense, right? So, and then the Fed plays the other side of it, where if inflation's a risk, they will kind of push the labor market down. They will restrict the economy, push the labor market down by raising interest rates and restricting liquidity by quantitative tightening, which is the opposite of QE. It takes liquidity away from those markets, ultimately helps to keep interest rates high. And we're still doing QT right now. It's not as big as, we're not doing Treasury QT at the rate we were. We reduced it by 80%, but we're still doing it. And we're still doing MBS QT the same as we have been for the last few years. So the Fed's still trying to restrict inflation over everything else. One of the good reasons from this tariff news that we've gotten. So we got this tariff news for US, EU trade. Apple threats and stuff like that. We've got that stuff happening today. One of the silver linings, as I've been saying over and over again this morning, is yields came down. And yields and interest rates follow each other. So this indicates a lower interest rate sentiment, more fears about a weak economy over inflation. So when we take a look at rate cut odds, it's still looking like this actually increased a little bit. So at this point, it's 5.2% chance that we cut in June. And we still have a 95% chance of a pause in June. So that's where we are now in the economy. That's what the Fed's doing. And essentially, the president of the U.S. is pushing for lower interest rates. The Federal Reserve and their chairman, Jerome Powell, is saying, hey, we don't want to lower rates right now. Inflation needs to be the priority. Hawkish, restrictive stance, and inflation needs to be the priority. And they're kind of battling it out, where the president wants lower rates because he wants strong economy. Because what's the president's bragging point? Strong economy. You know, Powell and the Federal Reserve, they want inflation to be under control. And they're worried that these tariffs and everything going on is going to make inflation worse. And so that is economic policy right now, modern age. That is what's going on this year. And yeah, we'll see what happens. Let me know whether you agree with, which side you agree with in the chat right now. Yeah, Singapore, they also have really good crypto laws. I need to start studying bonds and yields. Well, I mean, it's pretty simple. To understand them, Tiny, like I've said this many times today, but like yields and interest rates parallel, especially mortgages. So yields going down means lower interest rate sentiment. Typically, what can spark this is weak economic predictions, i.e. the European and Apple news today, scaring markets, making people fearful of markets, fearful of indexes and indices, I should say, and stock market and others. And so they gravitate to risk-off assets like bonds, right? Which means they buy a bunch of bonds. And bond prices that go up when people buy a bunch of them, and yields inverse each other. And so if people are buying up a bunch of bonds, it makes yields go down. You know, if people are selling off a bunch of bonds, i.e. Moody's downgrading the U.S. credit rating agency, the U.S. credit rating Friday of last week, and it hit us kind of Monday. Again, they're selling off bonds, which does what to yields? It makes yields spike, right? So the silver lining in this news is that bond prices came back down to earth a little bit. They're still pretty freaking high, though. There's a lot of correlations there that once you understand them, it becomes easier. What are yields? Yields are the interest rate that bonds pay you. Okay, so let's talk about it real quick. Right, so yields are the interest rates that bonds pay you. Right now, the 10-year yield is currently at 4.48%. 4.48%. That means if I buy up $100,000 of 10-year Treasury bonds, I basically loan the U.S. government $100K. If I buy up $100,000 of U.S. Treasury bonds, they are going to pay me 4.48%. They're going to pay me this number right here. So every year in interest payments, I'm going to make $4,800. Okay, so again, you can do the 10-year math here. So over the life of that bond, I'm going to make about 48%. I'm going to make about 48K from loaning the U.S. government 100K. I'm going to make about $4,800 a year in interest payments per the U.S. government by loaning them 100K. Now, this is much less than you would make if you invested in the stock market. Generally, there's always outliers unless you get unlucky. If you invest 100K with compound interest, making about what, 8% a year. 1, 2, 3, 4, 5, 6, 7, 8, 9, 10. You're gonna make over double that on average investing in the stock market. You invest 100K compound interest, you're gonna make about 216K over a 10-year period on average, and that's 8%. That's a pretty conservative number. It can give you 10, 12% over the last 10 years, or over the last 2 years. Nasdaq's done what, 105% at highs. It's less than that now, but it's still pretty high percentage-wise. So, but again, that's a little bit more risky. It's not guaranteed. Bad things can happen. It's one of the reasons when we start to get bearish action like this, people gravitate towards bonds because bonds are guaranteed by the U.S. government. Although their credit rating was recently reduced to AA plus and whatever Moody's calls AA plus. I can't remember what they call it. But that's the math. But when I say yields, that's what I'm referring to is the annual interest rate that the bonds pay you. That's what a yield is. Yeah, just be careful this week. Yeah, all good, Tiny. All right, guys, so we have dumped a lot this morning, and now we're chopping sideways. We got 30 minutes until the market opens here. We will see what we get. All good, Tiny, no worries. Yeah, I think people don't know what to do. They don't know whether to buy this up. They don't know whether to sell this off. They don't know what we're going to get. So I think we got a lot of uncertainty now in markets here from all the stuff going on. I'm waiting, honestly. I've made money. Most of my trades today I've earned money on. But I'm sitting tight waiting. How you guys doing today? You guys red or green so far? Let me know. And again, guys, if you haven't already, check out Top Step. Great way to learn how to day trade. We're gonna be day trading the opening bell live on stream in about 30 minutes. We got a 50K funded account. We're also trying to get funded on their new dashboard. The new dashboard pays out quick. I think the biggest edge is like micros on Top Step. Micros, tiny amount of fees per trade, no commissions on Top Step X. Great way to learn how to day trade. You can get involved with one. One of the things that's been working for me is like I've been taking 1 or 2 micros and adding to it. If it goes in my favor, if it doesn't go in my favor, I've cut it. And a lot of it hasn't gone in my favor this week because of the choppiness, but the losses have been very small. And so that's good. But again, they give you a demo. The base one's 50K. It's $50 a month. If you pass it, you get a 50K funded account, 90% split. If you fail, you lose $50. It's the best of both worlds. Limited risk, 90% split if you pass it. And you get to keep your first 10K in funding prior to that split kicking in. And they paid out hundreds of millions. They fund thousands. It's just a great way to learn in a structured environment with risking less than you would funding your own account, in my opinion. But I'm biased because I get paid by them. I try to be honest with people about it. You know, we do maybe 1 plug an hour here. And so, again, if you want to check it out, help support the channel, I'll put the link up. Understand all this stuff on screen. Can't guarantee anything. But if you want to check it out, here's the link. You can also see it pinned at the top of the chat. This is only the second plug today in about 2.5 hours. So, hey, hopefully we get some good stuff today. There's the link right there if you want to check it out. You do a good job, John. Hey, thank you, man. I appreciate it. Like, I try to make sure people understand stuff. Like, people try to critique my trading and all this stuff. Usually they're just kind of unhappy with themselves. I don't even claim to be a good trader, you know. Like, I kind of put everything out there for free. I just try to explain what's going on in markets. And then I day trade live, of course, every day. But I don't even claim to be good. And I just kind of let people understand how to protect their accounts as new traders. And so, again, if people critique that, usually they're just unhappy with themselves. And I genuinely, we got a good community here. Like, the regulars that show up here, very good people, you know. It's because if they're not good, we'll just boot them out of here quick. But China and Europe are renegotiating tariffs. Maybe. Hey, thank you, V. Appreciate it, brother. Like your honesty about being biased. I'm definitely top 3 most biased ever. So Powell does speak Sunday, Fernando. Sunday afternoon he speaks. We're going to stream it all live here, so you'll be able to watch it all live right here as soon as it starts. Yeah, definitely 3rd greatest, worst ever. I don't know. I would argue today's the better day to be trading lag as long as we don't get any other economic reports. The market has been basically flat for, like, look, if I put up the QQQ here, and I put up like a 30-minute chart, this has been the market for the last 3 days. It has been like just kind of whippy up and down, big range, but sideways. So I would argue the time to trade is volatile days, and we're actually getting some volatility today. The problem, though, the risks of day trading on days like today, and honestly, we've made money all day. The risks of day trading on days like today, though, are very simple. It's that if we get more news coming out, it could influence positions. And so just be careful. Set stop losses. Not an investment professional, though. Hey, thank you, Jay. Appreciate it. Where's the Dixie at? Some people talking about the dollar. Let's talk about it. Dollar falling down on this news, of course. Yeah, you can see the 10-year yields opening up red, which is good. Lower interest rate sentiment. All right, guys, so NASDAQ started to test the lows of the day again, though. We just got to be careful here. So just be careful today, chat. We're trying. Yeah, just be careful today. Not really any economic news worth covering. Next week's crazy busy. And remember, Monday, the market is closed. So we got 25 minutes until the market opens. Just remember, Monday, markets are closed. Just be careful. Do we expect an implied volatility increase on options? I would assume relative to yesterday, but who knows? I would assume so based off of the big drops we've gotten. We're more volatile right now, but again, you never know. Still testing these lows down here, chat. All right, starting to pop back up. We're at 780s. Again, I think we got to watch NVIDIA here. Bond yield still testing lows. NVIDIA's down at 129. It's basically been chopping sideways. Palantir as well. Dollar index is down on this news for sure, but it has been rebounding over the last, like, let's see, 1, 2, 3, 4, 5, 6, last 20 minutes or so. All right, guys, so Next week, we got NVIDIA earnings. It's honestly going to be wild. NVIDIA earnings are like the Super Bowl of the stock market where we got so much stuff going. Look at this bounce back, though. So we're back up to 20.8K. 20.8K. We're still rebounding up a lot. Look at this bounce back up. Over 800s now. Been chopping basically since then. Let's see what the opening bell gives us. We got 20 minutes left, chat, until the open. All that glitters. Is that a Kid Cudi reference? So if tariffs are inflationary to the country they are being applied to and yields have risen so much in other countries, why are they down today off this news? Well, because the easiest way to put it is because the stock market is selling off. And when the stock market sells off, people sell their stock market positions and buy bonds with them. And so when they buy up bonds, when bond prices go up, what happens to yields? They go down. Yields fall. It's nuanced. It's nuanced. As well as like tariffs are not just inflationary. They're both, right? So tariffs can cause inflation to get worse and weak economy, which is why people have been talking about stagflation, which is a state of economics in which we have a weak labor market and high inflation. So we have the worst of both, if that makes sense. If you ever hear stagflation, that's what it means. And I would say tariffs are both. They're weak economics mixed with high inflation. Yeah, so a German rights group fails in their bid to stop Meta's data use for AI. All right, guys. Market's back up, testing highs. NVIDIA is sitting right at that 129.50 level. The VWAP is right around 130. I think that's an interesting test to see if we're going to rebound or come back down some, is whether we break over that volume weighted average price and hold for NVIDIA and other big tech. Apple obviously getting weighed down on this. You know, we just see an article that says, quote, Tariff Man is in a bad mood ahead of Memorial Day, according to Barron's. They said, quote, stocks haven't had a great run this week and we're on pace, or stocks haven't had a great run this week and we're on pace for their biggest 5-day slide since Liberation Day lows in early April. But with the S&P 500 just 5% from its all-time peak, NVIDIA earnings around the corner, and bond markets settling from its recent tantrum, you could make a solid case for optimism heading into Memorial Day. And then it happened. And again, I'm quoting a Barron's article here. And then it happened. President, fresh from hosting a controversial dinner for well-heeled meme coin investors last night, took to a social media platform and fired off 2 messages that touched on his go-to theme, tariffs. And again, just to clarify, we're in quoting this article now. Apple was threatened with 25% tariff if they don't move iPhone production in the United States by the president this morning. We also had the president say that talks with the EU, the European Union, are going nowhere. And he said 50% tariffs is what he's recommending on them starting June 1st, which kind of cancels out the previous 90-day tariff pause that we had, and gives us a much more upcoming deadline at June 1st. So NASDAQ obviously has reacted negatively to this. We've had the NASDAQ dip. We've had Apple dip down. But you can kind of see the shock, the jolts to the markets that we've seen here. This is the big jolt that we've seen, and we've mostly been chopping sideways since then. So big falls mixed with sideways chop this morning, heading into the opening bell in about 15 minutes, a little bit over 15 minutes. So we'll see what happens. But yeah, markets have been tumultuous leading into this, and then now we're kind of flat and choppy here. I would short it if we got up higher, but we've kind of been chopping sideways. I'm just going to wait. We've had a pretty good morning. We've made money. You guys want to see something? This is what he said. I guess the big question is, do you guys think we'll get a deal with Europe done before June 1st? I think this is definitely going to put more pressure on them. I definitely think it's going to put more pressure on them. I think they're going to be more. I think the likelihood of a deal before June 1st went up prior to what it was today or yesterday, and so yeah, I don't know if we're going to get a deal done though. We'll see. I think that's harder to figure out, but I think the odds increased a little bit. Oof. All right, guys. Where are all these deals? Do you have one on you? No. I'll make a deal. You subscribe, I'll give you guys free market data. Do it now. Try it one time. Might feel good. Everybody's doing it, guys. Hit the subscribe button. Hit the notification bell. It's like the dude from middle school with the hot girlfriend from Canada. All right, chat. Tesla 336. Tesla down a lot on this news too. The news that caused this drop is right here. We've seen some Bitcoin haters. I'm whatever you guys want to do, like believe, whatever your sentiment is with Bitcoin, it's all love here. I mean, I think you're wrong, and I think Bitcoin haters are mostly just because they didn't get in 10 years ago, and so now they just want to act like it's useless. It's confirmation bias, right? Like they missed out on the big gains. It's the same people that come here and predict a crash every week, right? They missed out on gains. They want to believe the gains aren't real. And so they say, oh, it's nonsense. This isn't going to hold, you know? And look, you keep throwing darts at a dartboard, eventually you'll be right. Like, eventually we're going to crash, but we're still well above where most people predicted crashes, especially right now. With Bitcoin, I think a lot of people missed out on. Bitcoin has been one of the single best performing assets in the last 20 years. Objectively, when you look at it by the numbers, single best performing asset in the last 20 years. And a lot of people missed out on it. A lot of people didn't trust it. They want to say it's not tangible. They want to say it's not worth anything or whatever it is. Bitcoin is valuable just like PayPal is valuable for the same reasons. Bitcoin is valuable because of safety, protection, and universal ability to send money anywhere at any time. Okay, that is why Bitcoin is valuable. For the same reason a company like PayPal is valuable. It's not just that, but that's one of the reasons. There's a finite amount of them that are going to be able to be mined through the proof of work system, and money is going digital, regardless of whether people want it to or not. We're going digital with money. This is obviously and self-evidently true if you look at everything going on right now. Honestly, you know how I use cash maybe once a month, maybe. And even when I use it, I don't need to use it. I just have cash and I never use it. So I'm just kind of like, here, take this cash. And so money's going digital. And so you can either ride the gains up or you can hate on money going digital. It's going to happen regardless of whether you want it to or not. And I think a lot of the people hating on it are the older population. And I get it. Listen, I understand fearing technology. I'm not even saying you're wrong. Maybe it does crash. I don't think it does. But people are going to fear technology. When the automobile came out, people feared the carriage drivers feared the automobile. They said it would never work. You know, roads will never be filled with automobiles. When Amazon started, people said, oh, people will never buy books on Amazon. They scoffed at it. In the end, people fear technology and growth, and usually they're wrong. Technology gets more and more profound as time goes on. The people fearing it are usually wrong, and they miss out on some of the biggest statistical gains that things give you. AI is the latest example of this. I told a lot of people prior to this AI boom in 2021 that AI was the future. People called it a buzzword. They said it was a gimmick. They said it was useless. It wasn't going to be big. And then boom, we had the big AI boom over the last 3 years. People tend to fear technology, but you got to study this and understand it and not get left behind to where you're just hating on it. We did have a big candle here. Look at this movement here. So something just happened. Something just happened. Okay, so this news came out. The EU is willing to walk away from trade talks with China if meaningful progress is not made. Its ambassador to Beijing suggested on Friday, according to SCMP. However, a date for trade talks is proving to be elusive. The Swedish finance minister says the president of the U.S. EU tariff an unreasonable escalation, according to Bloomberg. And the U.S. energy chief Wright says we'll see nuclear energy announcement today. So those are 3 stories that just came out. Same thing with the internet. Yeah, that's the kind of the Amazon example I'm using is the internet. U.S. Secretary Treasury Secretary Bassett says president believes EU proposals have not been good quality, according to a news source. So this news just came out. That news just dropped. Yeah, the doom and gloom channels. The problem, though, here's the real issue I see with the doom and gloom guys. This is the real issue. Is that the market can drop 25%, and they never admit that we might have found a bottom. It's always more. It's always more. It's always more. Like, the most prime times to buy a dip, they're thinking it's going to drop another 30, 40, 50%. And the NASDAQ is somehow going to be down 80% or something crazy, which is not going to freaking happen. It could happen statistically. I don't think it will. Maybe it does. I don't freaking know. But the problem is that when we drop 20, 30% and most smart people are buying the dip, doom and gloom people will keep pushing like we haven't hit a bottom, like we're going to keep dropping and keep dropping and keep dropping and keep dropping. And it's just statistically improbable. It's just statistically improbable. And so that's the biggest issue with them, is that they don't capitalize on some of the highest percentage dips that they can get in because they always think we're going to drop more. And that's the biggest issue with them, is that they don't, they get too wrapped up in it. Yeah. And again, it's all love, regardless of which side you're on in these talks that I'm having. It's all good, guys. I appreciate you guys. We got 7 minutes. We're going to disagree on things. All right, so the German foreign minister on the president's tariff says Germany supports the European Commission to defend the European market. So that just happened. Another analogy is Bitcoin is another AOL or Yahoo. How is Bitcoin the same as AOL or Yahoo? The reason I gave a PayPal example is because PayPal, you can send money and it's valuable because of its utility. Bitcoin in the same context is valuable because of that type of utility as PayPal. Although I would argue Bitcoin has less red tape, it's more protected, and it's safer from getting hacked. All right. I mean, AOL is just a different thing. Yahoo search is a different thing. That's not the, you missed the correlation I was having. You missed why I used that in that correlation with PayPal. quantum computers can hack Bitcoin in milliseconds. How is that safe? No, they can't. Not yet, at least. I feel like people just say stuff just to say it, you know? Like, they don't really know if it's true. They're just trying to argue sometimes. It's all good, guys, but maybe I'm wrong. Maybe that's true. I don't know. I don't think it is. Yeah, maybe in 50 years. But how high is Bitcoin going to be in that time frame? That's the real question. I may just eat some hay, hang by the bay. I just may. What do you say? Like, it's still keys for your wallets once they become regular? Yeah, but I mean, okay, let's just look at that argument objectively here. If they're able to do that with Bitcoin keys, they're going to be able to do that with your freaking bank account and everything else as well, right? And so we can't just condense it to just Bitcoin. Like, if they're going to be able to do that, they're going to be able to do that universally everywhere. And so nothing you have is going to be protected from that if quantum is that good. Look at the NASDAQ bounce back up. We're up to 815s right now in markets, 815s. Yeah, I guess if you own physical gold, maybe. But a lot of people don't own physical gold either. A lot of people own digital gold, and in that context, it can get hacked just like everything else. Anyways, Tesla rebounding, markets coming back up a little bit. We are seeing some bounce backs in markets. Chat. We are seeing some rebounds. Looks good. All right, so Bassett says most countries are negotiating in good faith except the European Union. He said he's pushing for an EU trade deal with India by the end of the year. The German foreign minister says he's pushing for an EU trade deal with India by the end of the year. Treasury Secretary Besant says we just have to be careful in the timing of the tax bill. I'm not expecting the U.S. Senate to change budget too much. We would like to have Apple help the U.S. to make semiconductor supply chain better. The EU has a collective action problem, and he said we hope this lights a fire under the EU. Trump's move is in response to EU's pace on tariffs, and he said most countries are negotiating in good faith except EU. That is news that maybe rebounded the market anyway by Bassett. Markets are going up. Looking at our poll numbers here, we got about 1,600 votes ahead of the opening bell. 47% say no, the market does not rebound today. 42% say yes, getting a little bit more split. 12% say I don't know. Honestly, I'm happy my kid starts summer vacation. They started it yesterday, to be honest, but I'm happy they did. I'm glad they did. You know why? It's because, like, my daughter had softball. My son got picked up at a different time. And so we literally had to go up to their school 3 times a freaking day for the last 3 months. Every day, 3 times a day. And it got exhausting. My kids are old enough where they can basically hang out, too, and occupy themselves. Yeah, so I'm honestly happy. Jack did pretty good on all those finals. He's a smart kid. Jack's problem is that, like, in mathematics, he's very smart. Incredibly smart. All right, Tesla just rejected at the VWAP. He's so smart that he never wants to solve the problem and do the work. He always wants to answer it in his head. And he's doing, like, long division. He's doing, like, kind of deeper multiplication, decimal multiplication, stuff like that. He's doing, like, perimeter and length and stuff like that. And all these different things, and he wants to do it in his head. And the problem I told him, I was like, look, you're very smart. I said, sometimes you're going to get it right doing it in your head. The only way you can confirm it's right is by writing the problem out, and you have to do it. You have to do it even if you don't want to. Because if you don't, while you might be somewhat accurate, you're not going to be as accurate as you can be just doing the problem yourself. And so that, that was hard for him to do. Yeah, I'm just glad they're back home. Palantir? Yeah, Palantir and most other tech stocks are rebounding. Palantir back up to 121s. Yeah, my problem with school was always an attention problem. Like, it was hard for me to pay attention. There's the opening bell. We'll talk about that later. All right, guys, so there's the opening bell. We got NASDAQ rebounding over the last 5 minutes leading into the opening bell. We got Palantir up to 121s right now in market chat, 121s. Tesla is falling down quickly, though, here. I'm curious to see what Apple and NVIDIA are doing, though. Palantir testing the VWAP. NVIDIA opening up slightly red, but not too bad. But most of the markets are bouncing back some here as we speak. Again, we're looking at NVIDIA. Apple is up a little bit since the open. We got Google. Tesla coming down. Google rebounding a little bit ahead of the opening. It's kind of flat since the opening bell, though. Amazon dipping down a little bit. We're seeing some dips now. Microsoft falling down, but it's a little boring. Meta. All right, so we're almost back up to the level I would short it at. This is still the level at 926. I like 930 actually as a short, 935. See if we get up there. If we get up there, I'll short it, but I gotta wait. We don't really have any economic data. Apple's surging back up though. Apple's at over 196. Now it's back down under 196. I'm going to wait at least a couple minutes, let the opening bell play out first. Remember, we do have a long weekend this week, chat. So we do absolutely have a long weekend. Tesla falling down, though. So Tesla's dragging the market down. So is NVIDIA here. Like, I kind of want to buy this, but I'm also worried about kind of choppy behavior. It's a challenge account. You know what? We'll buy it. See if we rebound up. There we go. Nice. All right, we're out. A lot of stuff heading up. A little bit of a retracement. Kind of still want to buy this dip though. We'll try it. Entering a 1 micro contract, small. It's definitely, this is a challenge account, so it's a little different, but we're gonna get a 1, and then if it goes in our favor, we'll add to it. Looks good. We'll add a little piece to this. Took a little bit off there to protect it. See if we get another jump. There we go. All right, we're gonna get out that right there. Hey, we're up about 350 on the day now. You'd love to see it. Finally getting some volatility here. NVIDIA starting to rip. Look at Palantir, guys. Palantir up to 123s. Palantir now technically green on the day here, chat. Now technically green on the day for Palantir. Still moving up. Looks good. Where did I say I wanted to short it? I said I wanted to short it at 35s. I'm gonna try a small short right here. We just hit the 200 exponential on a couple different areas, so I can take a small position, and if we're wrong, get out pretty small. And if we're right, add to it here. A little bit early than I wanted to, but... Alright, we're gonna cut that right there. We lost 15 bucks. That's actually one of our first losses of the day. We got up to 22s. I wanted 35s. We didn't quite get it. Nah, it's alright. $25s, $27s. I'm gonna start entering a position here, and then maybe add to it. Up to 35s now. There's 30s. I'll take 2 right here. All right, we're flat. Got a little sell off. Flat right now. Waiting for it to hit 35s, which is about right there. I'll add to it. So you get that red candle dump here. There we go. All right, we took half off just to protect. Looks like it was the right move too, but oh, look at that. All right, we're gonna take another piece off there. Lock that in. Hold the rest. All right, we're gonna cut it. We were basically flat on that trade. We're hitting 950s though. I'll try this level here that we have on our charts. Definitely a little risky here, but it's all right. We got one in the green. I'm gonna see if we can add to it if we get profitable, and if not, it'll be small. We're still up 315 or 320 on the day right now. I just want to see if I can get a longer term green position that I can add to. And we're at the top of the range now. I need to see a little follow through here though. All right, we're about 8 minutes into the open. It's been a strong opening bell here. The problem is a lot of stuff's hitting some support, so I want to wait. I'm pretty green in this trade, and so I got some room. If it pops back up, I could just cut it flat, which I have no qualms about doing. I'd like to let it work a little bit more though. There we go. We'll add to this now. Take a piece off down there and get out there. All right, cool. All right, so we're up about 4 on the day. Look at that 50 level hold beautifully here for that short. Now it does look strong, and it might hold right here at the 200 exponential and rebound back up is what I'm worried about. So I'm just going to sit tight and wait for some more edge. Apple rebounded back up, so it's still not where it was, but it's back up, I would say, about 50% of the move from Apple that it dropped this morning. The big drop starts way up here. So again, we're back up about 50% from the move, I would say, give or take. 200 EMAs right there. It could hold support. That's why I cut it. I didn't want it to bounce at the 200 EMA and stop me out, so I just took the profit. All right, there's a dip. Again, we're on Top Step today as well, so if you haven't already, check them out. It's the prime conditions to learn day trading when most day traders lose money. So they give you a 50K demo. It's $50 a month. It's limited risk. You're risking $50 a month versus funding your own account 5, 10, 20, 30 grand. If you pass it, you get a 90% split, first 10K in profit. Pretty similar to funding your own account. If you fail, you lose $50. Best of both worlds. They've paid out hundreds of millions, fund thousands. And if you use Top Step X, 0 commissions, no PDT rule. Great way to learn. I'll put the link up. Palantir. Got right. The previous closing price for Palantir is this. It is right over where we're at now. It's at 122.29. That's where it closed yesterday. That's the red to green level on Palantir. It's dipping down. Nvidia's pulling back under the 200 exponential. The VWAP is at 130 for Nvidia though. So if we do bounce, we could bounce right here. All right, so we're coming back down. We're at 20.9. 20.9. Palantir falling down. Nvidia falling down with us. Apple correcting some. Apple's rebounded a lot, though. So the Apple correction is actually smaller relative to the others here. Yeah, so again, I'll try to get you the playlist before today, Vegas, is up. Yeah, remember the market's closed Monday. Sunday, Powell speaks. We'll cover it, but market's closed Monday. All right, chat. All right, guys. We're consolidating now. We've kind of taken our foot off the gas a little bit with our trading. Just kind of waiting for something to happen here. We are 13 minutes into the day. Stocks have ripped up originally and now they pulled back. I'm worried we're going to get a big sideways range today. So I'm not really interested in buying this dip yet. Although I do think if there's terms of edge, it looks like we're going to bounce up and retest highs eventually. Although I might be wildly wrong. Do not copy me. I'm not an investment professional. I'm not liable if you lose. Always understand. I have no idea what I'm talking about sometimes. Top 3 best and worst traders simultaneously. Understand CFTC 4.41. Don't copy me. No, we're not liable if you do. Do I want to buy this dip? Try it. Okay, that dip buy worked incredibly quickly. And so we're out. We're up about, like I said, about 4. Yeah, but we're still pretty choppy. Palantir is breaking under the 200 exponential and the volume weighted average price. This is a prime bounce spot for it though, so we'll see if it can hold. A lot of stuff is basically right in the middle range right now, like right at the middle of a range. So and like if we take a look at this, $850 right here, maybe. There's nines. Good thing I got out, but 75. I'll leave it. All right, so here's 850s. Let's see if we bounce at 850. Peloton looks like inverse head and shoulders. I don't like Peloton at all. Peloton's problem is they got too big too quickly. I've said this 1,000 times, but Peloton's problem is they got too big too quickly. They got really big after the original Peloton. They made too much money too quickly. Their stock price went up very fast. And then they started burning money. They started creating virtual reality rowing machines and things nobody really asked for. And originally, like, Peloton was a victim of the pandemic. They got too big too quickly during that. Share price skyrocketed. And then they started making bad decisions, which is a very common tale. And now their share price is all the way back down. I don't like Palantir at all. Or I don't like Peloton at all. I like Palantir. I don't like Peloton. Peloton up a little bit today, though, so that's good. But looking at the long-term trajectory of Peloton, I keep saying Palantir. It's Peloton. You know, it was at 170s. It made sense, too, because, like, during the lockdowns, everybody was, you know, riding virtual reality bicycles. Once that ended, though, people stopped. They started riding actual bicycles. And so Peloton, I don't know why I keep saying Palantir. Peloton lost a lot of business. They decreased. All right, so here's 850s. Here's 850s. Peloton is what I'm talking about, not Palantir. I like Palantir. Palantir currently at 121s. These are futures, NASDAQ futures. Look at the bounce at 850 right here at this level. Yeah, I'm basically trading the QQQ price action in futures. So we've had a pretty big rebound and then a retracement back up. Let's see if we get anything here. So we just made a little bit in our funded account too. I'll switch to that. We are green in both accounts that we're trading today. Getting some unknown here though, kind of back and forth. All right, so we're popping back up. Look at that 850 level hold. See what 900s do here. Trying to retest 9s. All right, look at Palantir come back up. Palantir up to 129, 121.75. Big rebounds in markets here, chat. Big rebounds. A lot of stuff starting to creep back up. All right, so we're switching to our other account here. You can kind of see we're up 91 ticks here. Very big green trade. We'll add a little bit to this. Take a little bit off right there after this dip. And let the drop continue here. Look at this drop. We're going to go ahead and cut it right there at the bottom of the range. So far we are up on both accounts. Looks good. Feel like trading randomly would be more accurate. I mean, I've been doing okay. Like what I try to do is I try to build levels and then capitalize on those levels in one way or another. Like try to attack the range between them if they have a good range. Yeah, give me a follow on x.com at beginner trades. At beginner trades. The 10-year treasury yield spiked up a little bit more this morning too. Now we're back up to 29s. Look at that dip right there at 29s. 20.9 is what I'm saying, by the way. Holding strong here. Unless we got some news. Visa and MasterCard fees hit by new round of EU antitrust scrutiny, according to Bloomberg. Okay, so there's going to be a call between EU Trade Commissioner Šefčovič and U.S. counterpart Greer. It's going to be taking place at 11:30 Eastern Time this morning. 11:30 Eastern Time this morning. Fed's Musalem says business executives are trying to figure out how to manage uncertainty about supply chains, inventory, and inflation. We are kind of rangy back and forth now, making big moves up and down. Y'all just be careful today. All right, we also have India and the U.S. are now being pretty close to a principal trade deal in 7 to 10 days, according to CNBC. Yeah, we got home sales data coming out in 10 minutes, or in 6 minutes. Specifically, we have new home sales expected at 695. We'll cover this. Look at these levels, though, man. I'm not going to say these are the greatest levels I've ever seen. But look at this. Top worked. This one worked. Yeah. At the very least, we're getting volatility today, which, like I said earlier, is a little bit better trade environment than the last week or so, which has just been terrible. Still pretty middle range, though. It's not really looking good. Look, we got 4 minutes left. The last, like, 3 or 4 minutes doesn't really look great, but we have had some volatility today, which is good. It's been easy to make money. We're green. So we're just sitting tight waiting. Fed Schmid says uncertainty is being driven by the tariff conversation. Water is wet, guys. Of course it is. You know, sky is blue, water is wet. Great job. Ridiculous. All right, guys, market's bouncing back. Here's that 9 level we've been respecting most of the morning. And there's a rejection at it. A big rejection, too. Look at that. Water's clear. Sky blue. Water wet is the expression. All right, guys, we got the, what do we have? What is this? We have existing home sales. Or no, I'm sorry. We have new home sales. Expected at 694K. 694K. Last time it showed up month over month at 7.4%. It's expected today at 694. Last time was at 724K. It drops in about 2 minutes. It's not going to move markets, just to clarify. Not that I think it will. I mean, unless it comes in like shockingly high or low or something like that. But it's unlikely it's going to move things. We'll see, though. We'll see what happens. We're going to short this a little bit on our challenge account here that we're already up pretty significantly on. 3 contracts. See if we can get deep into the green. There we go. We'll take a piece off. More deep in the green. Take another piece off. We'll let the last one ride. I don't think existing home sales are going to move it, but we got a minute until they come out. All right, guys, we got about 50 seconds until new home sales. I'm sorry. We can try to hold this one break even, but I'd let it drop if it does, if it wants to drop. Keeps getting some selling pressure, but popping right back up. Yeah, I'm going to cut that right there. All right, so we made money on that trade too. All right, guys, 30 seconds. 30 seconds until new home sales come out. Again, expected at 694. Palantir starting to creep back up, getting close to that previous closing price. 20 seconds here, chat. 20 seconds. Yeah, it's not going to move markets. That's what I said. Unless it comes in like shockingly high or low. And 5, 4, 3, 2, 1. And here's the report. 743, pretty high. 743 versus 694 expected. Showed up at a positive 11%, 10.9% actually, versus 2.6% last time. So this is actually much better than expected for new home sales. And the market's starting to bounce back. So it didn't. I mean, I don't know if this moved it, but the data was optimistic regarding new home sales. Look at that come in. So again, it showed up at 743 versus 694 expected. 10.9%. Last time it showed up at only 2.6%. So higher than the 694 expected, 743. Last time was 670. So more new home sales month to month, and the percentage increased about 10.9%. Chat 10.9%. That 200 exponential. And again, the reason I watched the 200 EMA, guys, is look at this. We just tapped it. Just tapped it. Yeah, so interesting. New home sales data out. Remember, guys, it's a long weekend. We got Powell speaking at Sunday. Powell speaks Sunday at 2:40 p.m. Eastern Standard Time. We'll be streaming that fully live as we do. Here's the new home sales data in chat. We'll put this up. I appreciate it, guys. Hey, listen, again, if you want to check out, we are up on our challenge account. I mean, we're green on our funded account as well, but on the challenge account, we are up about 6. You'll love to see it. Again, if you haven't already subscribed, hit the notification bell. We will be covering every single major economic report next week. NVIDIA earnings, GDP data, PCE data, the Fed minutes report, CB consumer confidence, durable good orders, Jerome Powell Sunday, everything going on next week. We got you. Subscribe, hit the notification bell. We appreciate it. Again, if you want to check out our sponsor, this is like the 3rd or 4th plug in 3 or 4 hours. So if you want to help support us, check Top Step out. It's a great way to learn in a structured environment to day trade versus risking tens of thousands of dollars like most day traders do. This is $50 a month for the base one, $100 a month for the middle one, $150 for the top one. If you pass it, you get the same size funded account. So if you pass the 50K challenge, it's $50 a month. You get a 50K funded account. You pass the 100K one, it's $100 a month. You get a 100K funded account, so forth. So on 90% split. Once you are funded, and if you fail, you're out 50, 100, 150 bucks. It's very limited risk, and learning to trade in that structured way just makes sense. They've paid out hundreds of millions. In the futures market, there's no PDT rule. You can day trade the S&P, the NASDAQ, the Dow, the Russell, gold, currencies, all kind of stuff, micro Bitcoin. It's just a beautiful way to learn day trading in a structured environment with less risk than most day traders end up taking when losing in the beginning. If you want to check it out, there's the link. Yeah, the levels been working beautifully with these. Hey, I'll see you guys later. Y'all be good. Have a great day. There's the link for Top Step in the chat. Remember, guys, top 3 worst trader of all time. Not an investment professional. Don't copy me. Not liable if you do. Good day. Have a great day, guys. We'll be back Monday, bright and early. I'll see you guys then. Good luck. Have a great day. Be safe. Remember, markets close Monday. Markets close Monday. Next week, we got a whole bunch of stuff. Durable goods, consumer confidence, CB consumer confidence, Case-Shiller house price index, Fed minutes report, NVIDIA earnings, jobless claims, GDP, pending home sales, PCE inflation, Michigan consumer sentiment, and more all next week. It's kind of a crazy week. I'll see you guys then. Be good. Love you all. Have a great day. Be safe.